What is an ETF and which one are the best to buy for 2021 and beyond on Trading 212 or on pretty much any brokers? That's what this video is all about. Let's find out. Hello everyone, my name's Alexi and here on this channel we speak about personal finance and about today's topic, which is investing. By the way, don't forget to check the description down below where you can find all the timestamps. If you want to go to a specific topic, you can just click there and you'll be there in a second. So an ETF is an exchange traded fund. And what the hell is that? Let me explain, it's not that hard. When you want to invest into a market, you pretty much have two different approaches that you can take. The first one being to buy individual companies, and we call that mutual funds. It's when, for example, when you invest into Apple, Netflix, or even, let's say, Papa John's Pizza if you want to. That's what a lot of people are doing right now, and the problem with that is that you're most of the time taking a little bit of risk. Let's say that you own only 5 companies and one of them is having issues, I don't know, maybe like a scandal, or they're doing some kind of fraud, or just the product is not performing as well as it should be, and the stock price is going down. And even if the 4 others are doing okay, your portfolio is still taking a big hit because of this one company that is not performing well. So the less companies that you own, the more risk you are taking. That's how it works. And the second option that I'm going to present to you right now is an ETF. The best way I could describe an ETF is, for example, a basket of stocks that regroups many stocks in just one purchase. Some really known ETFs are, for example, the S&P 500 that regroups the 500 most performing publicly traded companies in the USA, so it's pretty much the top 500 companies in the USA. You also have the QQQ ETF that regroups a lot of technology companies in it. And for another example, there's also the ARK ETF that regroups a lot of very disruptive companies and really innovative companies in it. So you can see there's a lot of different types of ETFs. Some are more risky than others, some are more speculative than others, but you can see that there's a lot of different types of ETFs. So what are the benefits of investing into an ETF rather than a mutual fund? Well, first of all, there are some big ones, so let's go through it right now. First of all, and a really important one, they are way safer than investing into just one company. Because if you buy an ETF, you are directly diversified into a lot of different companies. For example, just imagine that you buy 1 share of the S&P 500. Well, this way you are already diversified in 500 companies with one purchase. And what's cool about that is that if you want to have a portfolio of 500 companies without it being an ETF, you should buy one after the other, every single company until you reach 500. And at the end of the day, it's really hard to manage 500 companies. And here you have it with just one purchase, which is great. So this is an amazing way to diversify your portfolio without making it bigger and bigger with a lot of stuff inside it. And this way you also don't have to worry about what is enough companies and what is not enough companies that you own. The second thing that's great about an ETF is that you are having amazing return. Because over the long term, and listen to this guys, this is statistics, I'm gonna speak facts right now, okay? Over a long period of time, which is about 15 years or more, about 92% of mutual fund investors are having less average return than if you just invested into the S&P 500. It means that over 15 years you are researching, buying, selling, and worrying about your investments when you could just buy into an ETF and do nothing. This is great! You don't have to worry about what the company will do in the future, you don't worry about what time you want to sell a company or which time you want to buy more. You just buy into an ETF and you have all that sorted out already. And the great thing is that you're still getting better return at the end of the day, even though you're not doing all this work in the first place. And third advantage of investing into an ETF is that you don't have to worry about your money. And that is a really important factor to take into consideration. You won't be stressed every day because you don't know what your stock will be doing, you don't know what this company earnings will be. You just don't care because you have so many companies that are doing so great. Because remember, with the S&P 500 you have the 500 top performing companies. Well, you only have great quality companies in it. And investing into an ETF is so simple, so accessible that I will recommend it to pretty much anyone. So really don't forget that when you buy into an ETF, you really don't care about what your money will do in the future because you pretty much know at almost 100% that it will grow over the long term. Okay, so these were the benefits of investing into an ETF. Now, is there any downsides when it comes to investing into these? Yes, of course there are downsides. As always, you have benefits and downsides in anything that you do. So let's go through them right now. Okay, the first thing that is a little bit disappointing about an ETF is that there is something called an expense ratio. An expense ratio is pretty much a fee that you, the investor, will have to pay every single year, I believe, to the people that are actually managing this fund, because as I said before, it's an exchange traded fund. So there are people behind the back that are exchanging this fund, trading this fund all the time so that they make great return. But don't worry, most of the time you can find really low expense ratio and even some that don't even have one. For example, the one that I invest in the S&P 500 has an expense ratio of 0.07% per year. 0.07%. This is ridiculously low. So it's a really low amount of money and you're getting great return on the other hand, so I will not even worry about it and I would even say that it's worth it. Now, of course, since there are so many different ETFs, there are a lot of different expense ratios. For example, the one that I presented before with the ARK ETF is really high compared to the one that I invest in right now. It's about 0.75%, so it's more than 10 times what I have to pay, but there are a few reasons for that. Of course, the ETF of ARK is a little bit more risky, but also can get better return. So of course it's a lot of work for the people that are managing it, and it's also pretty much worth it if you get great returns, but you can also lose some money on the ARK because it's a really speculative and innovative ETF. And the second downside that I found when investing into an ETF is that it's pretty much not interesting. I would even say that it's a little bit boring. You pretty much buy, hold for the long term, and that's it. You don't have anything else to do, and as I said before, you don't have to worry about your money at all. So if you really have the need of feeling the adrenaline in your body every time you buy a stock because maybe it will crash tomorrow or maybe it won't, well, ETFs are definitely not for you. Sorry. And yeah, I pretty much think these two are the only downsides when you invest into an ETF. So now, what you really want to know, which ETFs are the best to buy for 2021 and beyond on Trading 212 or on pretty much any brokers. So as I said, all of the ETFs that I'm going to speak about in this video, you can find them on Trading 212, and if you are on other brokerages, you can probably find them, and if you don't, let me know in the comments down below, I'll help you out to find one. So numero uno, of course I'm going to speak about the S&P 500. I already spoke so much about it on this video. So I have about $20,000 into the VUSA, which is an ETF following the S&P 500, because the S&P 500 is an index fund. It's just a representation of the market, and the ETF is following what the S&P 500 is doing. So I own VUSA, which is the ETF following the S&P 500. So it has a little dividend of about 1.5%, which is great. And if you don't know what a dividend is, go and look at this video right here that will explain you everything there is to know about dividend and how you can make passive income with it. Why do I have so much money into VUSA? Well, because I really believe that the S&P 500 is a strong index, because of course the top 500 companies are performing pretty well. That makes sense, I believe. And also because in the long term, I don't want to be invested that much into mutual funds for the reasons that I gave you before. There's always more risk, and it's, you know, you don't have to worry about your money, which is a big thing for me. So yeah, if you want to buy the top 500 companies in the USA, you have to buy the VUSA ETF. The second on the list is the VUKE. The way this one works is pretty similar to the index fund of the S&P 500, because this one follows the top 100 companies of the UK. So if you prefer investing into the UK stock market rather than the American stock market, this one is exactly for you. It also pays a better dividend of about 3.9%, which is already pretty big. So you know that if you invest into this one, you'll get great returns when it comes to dividend, and most likely great returns when it comes to stock price appreciation over time. Of course, you can buy both if you want to invest into the American and the UK stock market. You can do it, no problem, I won't stop you. Third on the list, it's VHYL. I hate these names, by the way. This one is really interesting because it follows the whole world. Yes, you heard me right, every single market in the world is followed by this ETF. It means that just by buying one share of this ETF, you're pretty much buying so many different companies from all around the world. So if you want great diversification, and when I mean great, I actually mean the best pretty much, because you invest into the whole market, well, this one is for you. It also pays a 3.4% dividend, which is also big, And yeah, I believe this one is a great and interesting ETF to invest in. So this one is pretty much really safe because you get this big diversification, but you also get great returns for the simple reason that you invest into the whole market. For example, in India and in China, the stock markets are going crazy because these countries are growing super fast, and that's a great way actually, in my opinion, to take advantage of all that. Now, the fourth on the list is the EQQQ. Yeah, those names are not getting better. Just before, I spoke about the QQQ index fund, and this one is the EQQQ. Doesn't change anything, it's just the ETF following the QQQ index fund. So yeah, when you buy it, you pretty much invest into the tech sector mostly. Great companies, innovative companies that are growing amazing in the future, and yeah, the tech sector overall is a pretty futuristic sector that a lot of people are really bullish on, so I believe the EQQQ ETF is actually a great buy at the moment. The really only downside that I could find is that the percentage of the dividend is really low, it's about 0.9%, so you don't even get a 1% dividend return per year, which is fine because there's a lot of growth potential in this one. And the last one that I wanted to talk about today is the e-car. And I wanted to include this one because it's a really interesting topic and there's a lot of hype around it right now. It's an ETF that follows the electric car sector pretty much. So what happens when you buy e-car is that you're buying into all these companies that are either creating technologies for electric vehicles or companies that already are creating electric vehicles like Tesla, NIO, XPeng, and all these like Chinese companies or these big American companies that are growing super fast at the moment can be found into the e-car ETF. Unfortunately, this ETF doesn't pay any dividend because it's pretty new, and the whole point of it is that you would get great appreciation over time when it comes to the stock price. So yeah, when you buy it, you pretty much get all the great manufacturers of electric vehicles, you get all the people working on technologies like solar panels, hydrogen cells stuff, and really stuff that I don't really know myself. So yeah, if you are really bullish when it comes to electric cars, I believe the e-car ETF is for you. Now, if you have no idea at all about how to start investing, I would suggest going and watching this video right here that will help you out with that. And also don't forget to watch this video right here that is all about dividend and how you can work with them to make passive income. I hope to see you in the next one, subscribe to the channel, and I see you guys the next time. Bye bye.